Greetings, guys. I've decided to take a video and break down what I was trying to explain in the group, and hopefully, you guys will see it and understand it much better. So, our first step of analysis, we're going to conduct mid-range, take the high of yesterday's activity and the low of yesterday's activity, and also the mid-range, the midpoint of yesterday's price movement, right? So these significant levels shows price potential, meaning um, yeah, that's good, meaning the chances that price will build momentum in a specific direction, and also gauge the momentum itself, right? So using the pre-alert levels, your overbought and your oversold region, and those levels like this one, the 27, the 25 and the 75 level, they basically do not tell you that price will, when price is in the overbought region, you would automatically sell the asset. That's not what it says or what it entails. So on a proper scale, you'll see this. It has indeed validated a supply confirmation. So we're gonna have a 3-6 price break. Our first 3-6 price break of this current trends confirmation, where we had confirmation of supply. So back to the mid-range, we can see today's price never broke or exceeded that overbought level right there, right? Instead, it failed to test by testing. By level testing, we mean when the wick breaks the level itself, right? It's not actually a break. A price break is when when the candle breaks that certain level with the body of the candle. That's a price break. So testing a level, testing a tested level, it's when price basically retrace before the closure of the candle and wicks that specific level. That is price testing. So in this instance, it failed to test this level. So meaning it shows emphasis on the downside. It shows that momentum will build on the downside when it cut the 50% midpoint with that candle, right? It tested first, after testing, and then it actually broke. So we test first when the level, when you gauge momentum, when you gauge increase in momentum, the the level is tested before it breaks, right? Testing means it breaks with the wick. The wick shows the retracement before the closure of the candle. So break, for momentum buildup or price acceleration. I don't want to use the term price acceleration because you might be confused. So for increasing momentum, the first alert that you would find when you want to determine whether price is increasing or building momentum in a certain direction is price or a level is tested before it actually breaks. So it wicks the level, and then after that it breaks. So on this, I'm just gonna zoom in for educational purposes. So when this when this day started, now remember we're focusing on mid-range. When this day started on that panel right there, when this day started, it broke on the upside, right? Potentially the market might build momentum on the upside. So the pre-alert level, which is this level, the overbought level, was never tested. You understand? So it never, this is tested basically when the when the candle wicks, that is tested, right? So this is a perfect example. It tested that level and it also tested that level, but the confirmation of the break tells us more about the momentum building, the building up of momentum of that specific price, or the speed of the price basically. So it is tested on the upside, it is tested on the correlation zone. So on the correlation zone, it never broke with the body of the candle. So on the overbought region, it tested and it confirmed by a break, right? That is basically mid-range. So that break alone told us more about what's going to happen in terms of price momentum, in terms of price building momentum for future purposes. So when we come back to this, right, we had that break, we never had a test. We had a break, we never had a test. A test. So on this overboard region, we never had price testing. Everything failed. Excuse me, I think I have symptoms for corona. So it never broke there. It never tested that level. Remember, test is when level testing is when price or initial retracement before the closure of the candle tests that specific level with the wick. So it bounces with the wick, it breaks with the wick and not the body of the candle. So this level right there was never tested, right? Great. So this candle right here, it tested that 50% correlation midpoint. It tested, and this candle also tested, and this one confirmed the break, meaning gave us information about the momentum buildup of this asset in the specific direction. So it tested before it broke. The break validates the buildup, right? The momentum buildup. So I'm just going to use a proper scale so that you can see it properly right there. So that's a break, and after the break, this happens. Let me just put another level, my oversold level, my oversold pre-alert level. Remember, price doesn't mean when price is oversold, it will automatically be bought, or when it's overbought, it will automatically sell, right? So I'm just gonna show you, I just want to break this theory down to you guys. So this was tested, that was tested, it was tested twice before it broke. So it broke, it also broke the pre-alert level that tells you that momentum is going to be built on the downside, right? And then we had that movement again, it never tested, it broke. So it broke and then went down. So now we have I'll get into high frequency amplitude trading, because we have a consolidation market. So the difference between consolidation and accumulation is that in a consolidation phase we have supplies and demand. So we have confluence between supply and demand, right? Great. So what gave us this huge reversal, meaning I wouldn't have held this buy trade, I would have had basically took scrap money out of that. So what basically gave us the strong reversal right there is this baby right here, this confirmation of the low. Remember, in the mid-range we have two strong significant levels that are stronger than other significant levels. So the high and the low are stronger than the midpoint, and also the pre-alert levels, the overbought and the oversold region. So the candle that broke this level, it's not just any other candle, it's a principal candle, because it equates to two grid blocks. So this principal candle was actually the third validation, actually the fourth validation of supply, because we had one, we had two, we had three, and also we had four, right? So in this instant, this movement was bound to happen. So that is basically, this is what I want to focus on, the mid-range part of the testing and the breaking before you, to gauge momentum, basically the testing and the breaking to gauge momentum build up in a certain direction. So the pre-analysis, I mean the primary analysis, is to get supply and demand, whether the market is in a supply phase or a demand phase. Then after that, shit, after that, you then do your test on break, on level breaking. The level is tested before it breaks. It's tested first before it breaks, meaning it's a strong level. It's an indication that that level is gonna build momentum in the direction of the break, or in the direction of the distribution. But if the level breaks and not tested, it automatically breaks before it's tested. It means that the momentum is bound to weaken. Look, like I said, we're gonna have our first 3-6 price break. So when we move to our execution chart, this will be displayed much better. I think I'm going to stop with this now. I'm not going to explain the high frequency amplitude trading to add as a secondary analysis or confirmation for this asset to why we had momentum on the downside. Because when we consider high frequency amplitude trading, we conduct chain level, the amount the amount of supplies against demand, that is chain level. So now the focus here is price momentum using mid-range. So I hope you guys understand this, and please repeat the video, and then we will have a proper session for for Q's and A's. So please do ask questions if you don't understand, and I shall break it down to you further.